An ordinary Tuesday morning. A $6 coffee, the same card I'd used for 6 years. I hand it over, already thinking about my day. And the terminal flashes one single word: declined. On the sidewalk, I pull out my phone, still a little annoyed. A notification from my bank. Your credit limit has been adjusted. Adjusted. Not a terminal error, something much worse. I open the app, palms sweating. My limit, $18,000 for years. New limit, $4,500. Cut by 75%. Overnight. No call, no email, no explanation, nothing. Total silence. Then, out of instinct, I check my credit score. 748 last week. Today, 677. Down 71 points in a single night. No missed payment. No new debt. I had done absolutely nothing. I call the bank, furious. 20 minutes on hold for one single sentence. Decision based on a periodic review of your account. That's it. 6 years of flawless payments, dismissed by one recited line of script. That night, I thought I was dealing with a glitch. I was wrong. What I was about to uncover was a strategy. Silent, legal, massive. And if you own a credit card, you might already be on their list. The next morning, I dig through absolutely everything. 6 years of statements, line by line. Every payment, on time. Every bill, paid in full. I was hunting for my mistake like a suspect desperately hunting for his alibi. The verdict, hours later. 0 late payments, 0 overdrafts, 0 new debt. A rigorously perfect file. Then the real question hit me in the middle of the night. If I had done nothing wrong, why me? So I looked elsewhere. Specialized forums, Reddit, personal finance groups, and then total vertigo. Thousands of strictly identical stories. Same limits cut without warning. Same crashed scores. Same perfectly flawless customers. Across all those stories, 2 words kept coming back. 2 words I had never heard in 6 years of credit. Balance chasing. And when I understood what they meant, everything shifted. Balance chasing is simple. You pay down your debt, and the bank lowers your limit at the pace of your payments. You get down to $5,000, your limit drops to $5,000. You are chased by your own ceiling. But it made no sense. Why would a bank sabotage a customer who pays, who repays, who earns them money? The answer exists. It is rational, and it was about to change how I see credit forever. To understand the trap, you need one concept: credit utilization. What you owe divided by what you're allowed to borrow. That ratio drives 30% of your score, almost a third. Remember that number. My balance that month, $2,160. With my $18,000 limit, 12% utilization. Excellent. With the new $4,500 limit, 48%. Red zone. Same balance, same spending, same life. So, what changed? Here's the trap. The algorithm cannot see that the bank cut my limit. It just sees a ratio exploding. To the algorithm, I became a man on the edge, overnight. Read the sequence again. The bank makes a decision, the algorithm registers a ratio, and I get punished. 71 points for a choice I never made. And the worst part, it doesn't stop there. Because the other banks are watching too. They see my score drop. Their algorithms reclassify me, risk, and some cut my limits in turn. Each cut feeds the next one. It's a chain reaction, a spiral, triggered without warning. But here's the question that kept me up at night. Banks don't cut at random. There is a profile list, 5 boxes. I checked 3. How many do you check? Target number 1, the dormant card, the one sitting in a drawer for 18 months. To you, it's a safety reserve. To the bank, it's idle capital earning nothing. Target number 2, the person paying the minimum on a different card. You think your banks ignore each other? They all read the same credit report. One sign of stress over there, and they cut you right here. Target number 3, behavior shifts. A cash advance on your credit card, sudden gambling charges, rent paid by credit card, purchases that scream cash flow problem to the algorithms. Target number 4, and hold on, the bank watches you even when you never use its card. It's called a soft pull. It silently rereads your file every single month. You never see it happen. Target number 5, everyone when the economy coughs. In 2008, banks erased hundreds of billions in credit limits within months. In 2020, the exact same again, preemptively. No fault committed, no warning. Dormant card, unusual spending, bad economic timing. I checked 3 boxes out of 5, but what I discovered next hurt more than the cut itself, because the score does not measure what you think. All my life, I believed one simple thing: pay on time, repay your debts, and the score rewards you. Reliability traded for points, a moral contract. That's the story we've always been told. Wrong. When my limit got slashed, my 6 years of perfect payments didn't weigh in for 1 second. If the score rewarded reliability, I would have been untouchable. So, what does it actually measure? The truth. The score doesn't judge you. It judges your statistical profile, what millions of people like you have done. You are not a customer. You are a walking probability of default. And here's the secret nobody ever told me. Credit bureaus don't see your life. They see a photo. Your balance on closing day. One single day a month. The rest is invisible. You can pay your card in full and still show terrible utilization if the photo is taken at the wrong moment. The system doesn't measure your discipline. It measures a snapshot, blind to context, blind to you. And that's when everything flipped in my mind. If the system only judges a photo, then I can choose the photo. That night, I stopped being a victim. The counterattack was on. Step 1. Call the bank back. But not customer service. They can do nothing. Ask for the credit department, sometimes called retention, the people with the power to reverse the decision. The right door changes everything. On that call, you get 30 seconds, and the first sentence decides everything. No anger, no begging. One magic phrase that most people have never heard of. Here it is. I am requesting a reconsideration of my credit limit decrease. Then 3 bullets, 6 years of perfect history, updated income, often higher than what's on file, and your loyalty, factual, calm, precise. The bank's answer? No. Decision consistent with risk policy. And this is exactly where 90% of people hang up and give up, which is exactly what the bank counts on, not me. Second call, 3 days later. This time, a supervisor and a bulletproof file, proof of income, bank statements, a written dispute letter. When you go from complaint to case file, you change category. The supervisor's verdict: answer within 10 business days. 10 days of waiting, score still on the floor. But I wasn't going to wait, because I had one weapon left, the photo, and that one depended on no one but me. Weapon number 1, timing. Everyone pays before the due date. Mistake. The secret is paying before the closing date. The day the photo gets taken, same money, different moment, everything changes. Balance paid down to $400 before closing. On the photo, 9% utilization instead of 48%. Without earning $1 more, without spending $1 less. Why has nobody ever told you this? Weapon number 2, spreading. One card loaded at 48% is an alarm signal. The same spending spread across 3 cards at 10% each? Total radar silence. The algorithm watches each card and the whole picture. Weapon number 3, the most counterintuitive. Request credit limit increases on your other cards. One click, often no hard inquiry. The denominator climbs back. The ratio melts. You rebuild what the bank destroyed somewhere else. And above all, the fatal mistake to never make: closing the slashed card out of revenge. You'd lose its age and its remaining limit, and your score would dive a second time. You don't hand your weapons back to the enemy. 30 days into the counterattack, plus 44 points, the photo was mine again, and that morning, in my mailbox, an envelope, my bank's letterhead. The reconsideration answer had arrived. Upon review of your request, your limit has been restored to $15,000. Not the original $18,000, a partial win, but a real win, wrestled from a system entirely designed so that nobody ever fights back. 90 days after the declined coffee, score 761. That's 13 points above where I stood before the cut. The crisis had simply forced me to learn rules I should have known for 10 years already. Here's what this story taught me. The system never warns you. No letter before the cut, no alert before the fall. It relies on one single thing to keep working: your ignorance. Because understand one thing, the bank didn't change. Its algorithms are still running, tonight, across millions of accounts. I changed. I simply stopped being an easy target. My routine now: every card used a little each month. Payment before closing, not before the due date. Balance alerts on. Limits checked every quarter, 10 minutes a month, to never be blindsided again. This morning, Back to the same coffee shop, same counter, same card. Approved. The system isn't fair. It never will be. But it is readable. And once you can read it, it never catches you off guard again. Before you go, be honest with me. When was the last time you actually checked your credit limits? Not your balance, your limits? If the answer is never, you might already be a target and not know it. Tell me in the comments which of the 5 profiles you checked. I read every single one. And if this story opened your eyes, there's another silent trap waiting in your finances. One most people discover way too late. The next story is right here. Subscribe so the system never catches you off guard again. I'll meet you there.